My favorite topic, SDLT. Who is this from? Was it you, Robin? Go for it.
If you're developing stroke flipping a property, is there a way that you can avoid SDLT?
Possibly, but it's complex.
Okay.
So usually the question is, because if you're selling property, you don't care too much about the SDLT because the buyer pays it. Yeah?
But
You
when you bought it.
only care about the SDLT when you're buying it.
Yeah.
So I'll cover some really basic stuff for you on buying property just to raise your awareness. Okay? So if you own a property, i.e. your home, and you buy a second property, you'll have to pay the additional 3% SDLT. Okay? No way around that. If you're buying 6 or more units in one go, then you can choose to pay residential rates, or you can choose to pay non-residential rates. You have to do the calculation. So let's say Joe's buying 6 properties from Barry over here in one go, one transaction. Joe has the option now to say, let me work out the SDLT on the standard resi rates. Let me work at the SDLT on non-resi. Whichever one's lower, Joe can pay that. Okay? Now, let's say Phil's buying 2 properties from, where is it? Onace. From Onace. Okay? If you're buying 2 or more properties, then you claim something called multiple dwellings relief. Okay, this is a very good relief which will reduce your stamp duty land tax, especially if Phil's buying one property say for £500,000, the other one for 150 grand. You work out the average and you pay the SDLT on the average, because SDLT works in tranches. So again, no, I don't want to complicate it. I want you to go away, understand you can claim MDR. Okay.
Two different projects. It could be 2 different properties?
Two different properties from the same person.
From the same person.
Yeah, and then you claim 2 or more. So you could be buying, so for Joe over here, she could do residential, non-residential, and then also look at MDR, multiple dwellings relief, and work out which one's the lowest, and then she can choose to pay the SDLT there. Okay, if you're buying property through probate, there's ways to reduce SDLT. If you're buying property that's uninhabitable, there's ways to reduce SDLT. SDLT is very complicated, very vast, and the bad news for you is most solicitors don't fully grasp and appreciate SDLT. So always speak to a tax specialist who knows a lot about SDLT just to work out if there are any savings to be had. Okay? So we claim back between 5 to 10 SDLT cases every single month for people who've overpaid the SDLT. Okay, so it's big, long, complex. Happy with that, Robin?
Yes, thank you.
Yeah, cool. This one here was the big one, really. Limited company. Whose question was this? Mike, go for it.
Hi.
Do you want to show him some more love?
Hi, Mark.
Watch it.
So I'm very new and very much starting the property journey, considering the differences between limited companies and kind of personal ownership. Just trying to understand the kind of basic, efficient ways to structure it so that it is most efficient, both in terms of cash flow immediately, but also then long-term passing on property owners' property to.
And are we talking here specifically about buy-to-let or anything?
I'm looking
in property, by the way.
Towards buy-to-let, but just kind of just I know nothing, so just a high-level, basic understanding of what's a good idea, good place to start, really.
Okay, cool. And do you own any properties at the moment in your own name?
No.
Do you have a job?
I do.
Are you a high rate taxpayer?
No.
Okay. Are you close to becoming a high rate taxpayer?
Very close, yeah.
Okay, so in that case, we'll treat you as a high rate taxpayer, just to keep it simple. So you're better off buying properties in a limited company, because if you buy them in your own name, you've got something called Section 24, which means you can't claim all the interest costs. Okay, so we'll start there. So you have a limited company. For those of you in the room who are a bit more experienced than Mike, what are some of the benefits of having a limited company?
Write off all your expenses.
You can do that he can do that in his own name as well. But for mortgage interest, Alexander, yes. So who said that? Okay. Why do you say that?
You pay, maybe I'm not right, but you pay business tax on the profit.
Yep, so you pay corporation tax as opposed to capital gains tax. The only problem, Gary, is although you pay corporation tax, which is at 19%, the money's stuck in the company. So if you take it out, you then got to pay income tax.
Then you put it into your tax, right?
Well, if you're buying and selling property, then yes, yeah, that's right. So
You can take £2,000 per year per person, right?
So you can take dividends, okay, Mike, which can be efficient. The first £2,000 per person, Mike, tax-free. Anything else? What's generally the big benefit of having a limited company? Why do people forget property, just generally? Steve?
Offset all expenses and your VAT, claim back your VAT.
It depends on what you're doing. So if you're making vatable supplies or zero rated supplies, possibly. But what's the real big obvious benefit, Joe?
Limit your personal liability.
Limited liability, Mike, yeah? So and for Mike's benefit, Joe, what does that mean for him?
It means that you're not personally exposed, your job, your house, all the rest of it is not necessarily vulnerable if anything wrong happens to the company.
So if anything goes wrong and the properties are in your personal name, you'll be personally sued, liable, you can lose your home and all that kind of stuff. Yep. And if it's in a limited company, you've got the corporate, structure, therefore it's limited to the company only, unless you are personally found to be fraudulent and negligent, which isn't easy to prove, and you're not that kind of guy anyway, so you've got nothing to worry about. Viresh.
It's probably an obvious question, but what if your company's set up but it's got your home address on the as the
Correspondence?
Yeah.
So you can change that.
Sorry, what was the question?
So the question was, if you have a limited company with your home address and you don't want your home address to be there, what can we do? And the answer is you can change it to some other address, to your accountant or a PO box or whatever you like.
Because if it wasn't, does that mean they can actually come for your...
No. It just means people know where you live. Okay? But again, you've got nothing to worry about, Viresh. Yeah. I mean, you've got security, long driveway, big gates. They can't get to you.
316 Fitzrovia Road, Peterborough.
Yeah, exactly. Yeah, that's right. Yeah. Good luck finding it. Gary?
Isn't most of that, the corporate veil thing, kind of null and void when you look at mortgages within LTDs, because they're all asking for everything, all of them?
Yeah, so if you give absolutely. So if you take out a mortgage, they'll ask you for a personal guarantee. If you give a personal guarantee, you're a bit snookered. However, Gary, where it helps is when you're doing the bigger deals, like Alexander, and you do a commercial conversion, for example, he buys a property for 500 grand, spends 500 grand refurbing it, it's now worth 1.5 million, for example. He then wants to refinance it and gets between, let's say, 75% and sometimes 80% of the funds out. When he does that, the lender won't ask him for a 100% guarantee. They'll say, can you cover the first 100 grand or first 200 grand? Okay, but single buy-to-lets, they want the whole lot. So that's where it helps. So limited liability, dividends, CGT, you've got you can claim all the interest. Then the other benefit for you, Mike, is if you want to give different class of shares. So if you want to add your husband, your wife, your children, you said future planning, you can give them shares of different class. What that means is you can control how much income they get and how much equity they get from the company. So that's going to give you lots of flexibility. Yeah? Any other benefits of having a limited company, Robin?
Could I ask a question on limited companies?
Of course you can.
If you're making a profit, whether it's from renting or selling, can you reinvest that before capital gains tax, or if you've made your profit from your rent, you have to pay corporation tax. You have to pay corporation tax on it, and then you would reinvest.
Yeah, that's right. So you've got to pay the tax.
Okay. So even if it stays within one tax year, you can't make your rent. You're still going to pay your.
No, yeah, it doesn't matter how much. So you reinvest post-tax.
Okay.
Yeah. Hi, up the back. Your name is?
Helen.
Hi, Helen.
If you transfer from the limited company into the SAS, and then
You mean the funds?
yeah, and then loan them back to the limited company,
Yep.
do you still have to pay the corporation then?
No,
Yes, you do.
no. That's good, isn't it? Robert,
Could I still use a Help to Buy ISA if I'm buying for a limited company?
Deal.
is that a £500 fine or £1,000?
If it's a deal, it's okay, but if it's not a deal, it's a fine.
Was that a deal, Helen?
Yes. It could have been.
Yes, it was a deal. Yeah.
Yeah, if I'm using a Help to Buy ISA, can I still do that through a limited company?
Help to Buy ISA, Kevin. If you have a limited company, you've got property in there. Are they going to allow him to make use of that? I don't think so. Kevin doesn't think so. Kevin Paneskis, do you have a view on it? Do you know? Yeah.
Could I buy it with that as a personal and then transfer it to the limited company?
There's nothing stopping you doing that. However, if they look into it, you might have a problem.
So sell it to his.
Sorry?
Sell it to his limited company. We've never met before, by the way. Yeah.
In that case, it's a really bad idea, by the way. Yeah.
Joe's not related to him. I don't know.
No. Hence why it's a really bad idea. But if you're transferring to my property company, it's a good idea. Now, there'll be some limitations in terms of what you can and can't do. I think that will be one of them, because you can't. You make use of the Help to Buy ISA and then transfer it elsewhere. So they'll stop you doing that. Viresh.
Very quick question.
By the way, we were talking about the benefits of having a limited company here. So we've kind of gone over there and there and there. So after you will come back.
So talking of limited company, so if I was looking at, say, two different strands of a property business, i.e., so say I had rent to rent and I was doing deal sourcing, deal packaging as well, would there be any benefit in actually splitting that within the limited?
So that's a good question. And once we finish this, we're going to go straight onto that. Any other benefits you can think of having a limited company? Hi, your name is?
Alison.
Hi, Alison.
Just a quick question, actually, to do with buying property. Do the rules for having a limited company change if you're buying abroad?
No. The tax rules do, depending on what's going on, because then you've got to pay tax in that country and tax in the country that you're situated. But in terms of how the company's operated, managed, run, nothing changes. But the tax does.
I've got a question. I mean, sometime, you have a limited company.
You can have a question first, but you've got to give me one benefit of that of having a limited company.
Well, it's a corporation tax and the dividends tax. So I'm coming to that question.
So what Z is saying for you, Mike, is that the benefit is you pay corporation tax and not income tax, and as your income increases, okay, corporation tax stays at 19% flat, although it's changing going forward after 2023. Income tax is first 12.5 grand tax-free using your personal allowance, then you're paying 20%. When you go over 50 grand, you're paying 40%. Over 100 grand, and you lose your personal allowance. For every £2 you earn, you lose £1 of your personal allowance. So when you get from 100 to 125,000, you've lost your personal allowance. When you go over 150 grand, you pay 45%. That's what you said, didn't you?
Yeah, this.
Yeah. So basically, that's what he meant, as in, do this, not that. Okay. So lower rates. Now you can ask your question.
Okay. Okay. It's a corporation tax and dividend tax. One draws a salary, and of course there's income tax and a corporation tax involved. And then at the same time, if one draws a dividends more than £2,000, and he has to pay a dividend tax as well, which is
7.5% up to 50 grand.
Up to 50 grand. And doesn't it mean a double tax here? I mean.
It is, but it can still be efficient depending on how many people you've got and how you take the money out. So the benefit, so Z's point for you, Mike, is you've got to pay two taxes, corporation tax, and when you take the money out, income tax. Okay, the beauty about a company is you've got control. So if you have the properties in your own name, at the end of the year, the money's in your bank account. You've got to pay 40%, 45%, or 20% tax, depending on how much profit you've made. In a limited company, you only pay 19%, so you can control how much money you take out every year. So you might say, Z, I only want to pay 7.5% dividend tax, so I'll take 50 grand. Then you add your son Ahmed to the company and give him £50,000, although he'll be earning a lot more than that when he's qualified. And then if you've got other children or grandchildren, you can add them on there. So you can control how much you take every single year. So it gives you a level of control. In your own name, you've got no control. You pay the tax as it is.
What age can you add your children?
Yeah, 18.
Need to be born.
Is that okay for you? No.
What's the answer?
The answer is, they need to be 18.
So have them quick.
18 to receive dividends, so.
No, 18 to add them as a shareholder.
Well, when can you pay them dividends? What age?
Well, there's no limit, but if you got to make them shareholder first, so 18, yeah?
And you can also use their personal allowance as well.
You can use their personal allowance as well, yeah? And it's really good because once they get to 18, if they're going to university, for example, you use the personal allowance and the £2,000 tax-free dividend and even the 7.5%, so you can fund some of their university fees.
Just to clarify for people who doesn't matter, they can be a shareholder at 18, but can you hire them to work for the company?
So if they want to work for you, from 13 onwards, you can pay them.
Child labour.
Yeah. But you can't pay them 40 grand a year at 13.
What's the maximum? How much can you pay them? What's the limit? There must be a limit, right?
It has no. There's no limit. It has to be commercial. So if they're working for you and they're working, say, 10 hours on the weekend, and you want to pay them £3 an hour, that would be acceptable. For example.
So there is a limit?
There is no limit per se, but it has to be commercial. So if you said you've got a child age 13 and you pay them £20,000 a year, it's going to be difficult for you to substantiate that at tribunal, because they'll say, how can a 13-year-old be earning £20,000 a year, especially if they're going to school, which they should be.
Ryan's toys.
Why did you come up with £3 an hour? That's a big difference.
Yeah. So £3. So if your child, Alexander, were to do a paper round, how much would they get paid per hour, for example?
Minimum. No, it's minimum wage is £4 for 16-year-olds.
For 16-year-olds, it's less, yeah. So £3-4 an hour, it'd be fine.
16?
If they're 16, then you can pay them a bit more, yeah. 18 goes up a bit more.
It has to look legit.
21, yeah. At the back there, your name is?
Claire.
Hi, Claire.
A director in my limited company owns a house which he wants to convert to a buy-to-let and move into the limited company. What are the tax implications of that?
So he owns a property.
Yeah.
He wants to move the property into a limited company.
Yeah.
We'll come to that in a second. Let's just finish this off because I think I've got about 7 minutes left. So these are some of the benefits for you, Mike, of having a limited company. Yeah.
One more benefit, you can do loan repayment.
So when you start the company, if you put £50,000 into the company, that sits there as a director's loan. You can charge interest. If you charge interest, the company claims it as an expense, and that could possibly be tax-free for you. We're not going to go into that because that's going to take too long. And when you draw these funds out, you pay no tax on them because it's not income, it's loan repayment. That's the point you're making, Raj, yeah? Okay. Now from having a limited company, Mike, you're saying, I want to go into, so here, let's say you're doing service accommodation, you're saying now I want to do rent-to-rent, or deal sourcing, or something else. What do? You've got two options. So this is to answer your question, Viresh. You can have two companies, separate, or a third one, but the real good idea is to have a holding company up here, call it HCO, and this then owns all of your property businesses. And then you can transfer money up and down to some real weird and wonderful stuff, including using your SAS to really be very tax efficient. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.